Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, April 29th, 2021. What I'm going to do is start out with an overview of the broad markets. We'll look at the charts, the technical posture of the markets, levels to watch. I'll talk briefly on some of the fundamental cross currents that we have currently in the markets. Some pretty big stuff. I think those are worth noting. Most of what I do is focus on the charts, technical analysis, but fundamental analysis most certainly has its place in investing in particular, but even trading at times. So we'll look at that. And then just kind of a potpourri mix of some of the trade ideas that I've been highlighting recently, any new ones that I might have come across, we'll hit on those. So all in all, be a mid-length video. Try to keep it under 30 minutes here. I'll do my best. All right, SPY, still levels to watch. I've color-coded these up yellow. We've been talking about these for the last couple of weeks, really, or at least a week or two. 410.39, that needs to go. That's support on SPY. It's not a major support, but certainly a minor support. We don't have any really major support levels right now that I see. But again, you just look for these divergent highs and divergent lows, and they often trigger the mark the inflection points. These tradable trends in the market. So now, other than this 60-minute chart, which I'm focused on and looking to see a break of that 410.39 level and a comparable break, or a break I should say, of the comparable support on QQQ, here's something else to be watching for today. Potential bearish reversing bearish engulfing candlestick, which is a reversal pattern, a reversal candlestick pattern. So what you want to see is the body of this candle, today's candle, engulf at least the previous candle. That's the definition, the body that is of the previous candle. That's the definition of a bearish engulfing candle. They come at the end of an extended uptrend. That's when you want to look for them, not after an uptrend has just started, but once you have a pretty stretched or prolonged uptrend. And ideally, I like to see it follow through the next day with an additional red candle. So that would be tomorrow, assuming we get one today. Now, the day is very young. We've only been trading a couple hours, but there's been a nice fade at the open so far, and that's part of the what goes into the making or analysis of candlestick studies. Buyers jumped in, the news head flows. I'm going to get to that in a second. There's cross currents there for sure. Some extremely bullish fundamental factors for the market, coupled with some pretty darn bearish factors. So we'll see which one wins out. And again, fundamentals take a much longer time to play out than technicals. Technicals are going to give you a heads up on when a trend changes before or right after it has, whereas the fundamental news flow will usually follow long after. All right, so that's it. And by the way, if we do get a bearish engulfing today, basically we just need to close down anywhere below where we're at right now. We're at about 416.92, so call it about 417 on SPY. But what it would do is engulf at least the previous three candles, not just one, because see these very, very tight flat candles. That's the thing. Volatility has really compressed here lately. And so again, just one thing to look for. We'll see. Let's not spend much more time on that. Just something to watch out for. And then if we get the bearish engulfing today, I'll do an update later today, and we'll watch to see what kind of follow through we have tomorrow, because I like to see that confirming at least one additional red follow through candle. QQQ on the daily, we also have a potential bearish engulfing in play. I mean, it's there now, but only thing that matters is how we close the day. Bulls could get a stick save by rallying this up and then closing above yesterday's candle. But there's the body of yesterday's candle already engulfed. And if we got a big dump today, or we get a bearish engulfing today and we follow through tomorrow, here's what's going to happen. This is how technical analysis works. Look at all this. The Qs have gone sideways now for weeks. These are daily candlesticks. This is a daily chart, so turn off all the lines there. So we have the potential to wipe out the past, going back. My pop-up box on the left says that's 16 candles, 22, almost 23 calendar days, or about exactly 16 trading days. Again, that's if we close below, down or around, this level here, 334 or so. So again, just something to watch for. The trend is clearly bullish. We're in an uptrend, but indicators are rolling over. We're overbought, and what I'm about to get to in a second, I'm going to show you the cues are really not doing much. They're stalling out, not just recently, but for months now. And remember, the cues are the Nasdaq 100 is chock full. The fastest growing and largest companies in the world are what I call the FAANG stocks: Apple, Microsoft, Alphabet, Google, Amazon, Facebook, and that is usually, well, it's often not a good sign when the stock market continues to drift up or hold up, but you see these stocks just no longer going up. What I'm doing here is I've just grabbed my measuring tool from where we're at right now back to where we were right here. Let's pick this candle because that's about flat, almost. We're from where we're trading today. You can see the pop-up box. We're only 2% above where we peaked out in the end of January. That's January 25th candle right there where my things are. So again, the market's not going down, and it has gone slightly up, but it's gained about 2% since that point in time. We've had some ups, downs, mostly sideways. PPO recently crossed over. The last time we had a bearish PPO crossover was right here. See on the crosshairs, and here's what happened from that point. You had that, from the point of the crossover, we dropped 11%. The top was already there. Things to watch. And where I'm going is I'm getting closer and closer to, going to a outright net short portfolio. Like I said, there hasn't been a lot of opportunities trading the broad market, and I'm going to get to some of the individual trade ideas, both long and short. Here in just a second. So those are the things I'm watching for. That's on the daily chart. 60-minute chart, colored up the levels. It says 334.94. I'll leave it 333.94. Again, call that 334-ish. That's the level I think needs to go on QQQ. And again, you can see for weeks here, really, we're in this trading range boxed in, and that's the bottom of it. That is support, just like we have that comparable support on SPY. That's the level that I believe needs to go. There's a big gap underneath it, and you can see we had divergence back here. We made roughly an equal high today, and all that does is move the needle, or in football, you're moving the sticks. But again, we didn't go anywhere above where we were before. We made an equal high, and that is still divergence when you have equal or higher highs in price and lower highs in the indicators. All right, enough on that. The levels to watch. For you futures traders, I also colored up the lines. It's about 4,100 on ES, same level I've been harping on a while. Had a little minor uptrend line here I added earlier today. Gives us this little wedge type pattern here. The only thing I need to do here is just take our divergence lines, extend them out. They're still very much intact, and we broke that, and we're starting to get a little bit of impulsive selling on the reversal today. So again, let's see how we finish the day. Micro support, if you're an active trader on ES, I'm going to give you a level right here. I see is minor support, and right about there, right about where we are right now. I put the line at 41.66, and I did that because you can see lately, last few days, that's been support. All our pullbacks were contained at that level. Before that, it was resistance. The way technical analysis works is resistance, once broken, becomes support. So this is the level to watch today. Break of that, I think, has a good shot of bringing us down there. Maybe not necessarily today. Who knows? But again, a level to watch, 41.66, with the next support being down around 4,100. And then you can see the other levels on the chart here. NQ, I also added this line today before it even broke down. I had these in this morning. I've been going through a lot of charts trying to figure out what to share with you, what's relevant, what's not. I don't want to make these videos too complicated with too many trade ideas, but right now in the markets, again, that was a minor trend line. It was broken. Pretty big reversal, pretty impulsive so far, but the big level is color coded here in yellow, is about 13,700 on the NQ, and that's comparable to those levels I gave you on QQQ, ES, and SPY right there. So those are levels I want to see taken out. And remember, again, this is kind of ties into what I started with on the daily time frame, talking about those bearish engulfing candles, because the way technical analysis works, if we break that, then every single person that has bought stocks, went long, in the Nasdaq one, or bought the index, let's just say, over this time period since when is that? Almost the beginning of the month, early April, right there. They're all underwater, and that's what happens. So what happens is stop loss orders get hit. Think about every long that bought here and has stopped somewhere below. Those start to get hit. Shorts will pile in, and likewise it's bullish if we break out. You break to the upside, that's a trading range. I always talk about it. It's like energy building like a coiled spring, and from these trading ranges you tend to get some pretty good moves. The fact that this one has divergence building makes me lean towards a downside break, but again, as I always say, support is support until and unless broken, so we'll watch that. And likewise, resistance is resistance until unless broken. And resistance on the Nasdaq 100 is the recent highs. Look how many failures so far, right around there. Several there, another one there, and another one today. And this one was pretty impulsive so far, the rejection off that level, or right around the recent highs. RTY is a small cap index futures, Russell 2000. And so what I need to do is add, there's my divergence line. Up until recently, we didn't have any divergence. We had a trend line break I mentioned recently, rally into resistance. And now we have, I take it back. We had a little bit of divergence there, but now much bigger divergence there. Let me just add the line so you can see it. And a pretty impulsive rejection so far. This is RTY back below that 2300 resistance I mentioned the other day we hit. We had reactions there, several there. Popped it but couldn't hold it, and pretty impulsive reversal so far. And the bigger picture on the Russell 2000, the IWM is ETF, small cap ETF, is this primary trend line I've been highlighting. We long since we broke those already in back tested on QQQ and SPY. That's the trend line that comes off the March lows, or what I call the COVID lows. That was when the pandemic really took grip. Took the market down, and so the small caps have been the strongest index so far, not having taken out that trend line. And I called for a pullback to hit it up here when we broke. I had some sell signals on the 60-minute chart, and that was my target, as well as this level just below. They came in together. We almost hit it there, as I talked about, bounced, and when we did, I said, I suspect we'll get another run down to hit it, and we did. We got a perfect tag of it right there. What does that mean? Well, it's sport. And sport until unless broken. Should we continue up to make a high anytime soon, it would be a marginal new high, and the divergences are still very much intact and would simply be extended. I'm talking about the divergences we had in place at this previous high. Otherwise, a break of the trend line would bring us down at bare minimum, I believe, to that 205 support. It's a pretty good support level. If and when that's taken out, and again, guys, remember, I do these videos because if it all happens, if all this comes together and we start clicking off these sell signals, firing off on QQQ, NDX, the S&P 500, and especially right now, I know this market seems bulletproof. It has been bulletproof. I could sit here and make the most bullish case for the economy, and then recently there's some bearish things coming out fundamentally, but that doesn't matter. Charts matter, and just have your ducks in a row. Whether you're a long side trader only and you're looking where to take some profits, or reduce exposure, or you're looking to game the next short correction in the market, this would be my preferred swing target. So again, I think it'll play out like that. A drop down to 205. By the way, there's a bearish engulfing candle right now. If we close down around these levels or lower, we've just wiped out or engulfed the last 3 days. Nothing huge, but again, a lot of hot air. So if we were to drop and hit that 205 minimum target, again, that target's contingent on a sell signal, which could technically come today with the bearish engulfing, be confirmed tomorrow. But again, a break of the trend line would be your next, that's your first support level break right there. That's significant. Drop to 205 takes you down about 9% on the small caps, and a drop, if and when that level goes, a drop to 170, and that's about a 25% drop from where we're at. I would put good odds if we take out 205 with conviction. And assuming the S&P 500 and Nasdaq 100 aren't at or near a good support level at the time, especially if they break some support levels, then we'll probably head down there. So call that a trade setup. And until then, we're in an uptrend, and maybe that continues, maybe not. That's how the charts are. It's all contingent. Bearish and bullish setups and scenarios are contingent on a buy or sell signal, i.e. a breakout above a bearish or bullish chart pattern or certain resistance support levels. All right, what I'm going to do to keep this video not too long, I'll just go into some of the fundamental going on right now, some of the things fundamentally that I'm watching. And yeah, and I think I'll probably do the trade ideas in a separate video. You know, here's the headlines recently. Let me go over here. This is today. U.S. economy grew at a 6.4% annual rate in the first quarter. I mean, that's huge, and we know that economy's been strong. Everything, you know, people are going back out again because of the vaccines, and there's a lot of restocking going on. There's still some supply chain disruptions, but either way, that's huge. I'm going to comment on this. Again, a little bit of fundamental ramblings. You know, my background is in fundamental analysis. I was a business major in college, started my career as a stockbroker, and, you know, almost all that we dealt with, especially back then, was fundamental analysis. And, you know, later on, I discovered what I believe to be the miracle of technical analysis. It's just, to me, it never fails to amaze me how much more accurate it is predicting where, you know, prices are going to go, especially in the short term, versus fundamental analysis, which takes, you know, a while to play out. Either way, huge numbers there. Okay. I always try to be apolitical, keep the politics off the board, but I have to, you know, this is very relevant right now. I was critical when Trump pushed through big, you know, tax cuts and the stimulus plan back, you know, after he took office, when the economy was doing fine as it was. You don't need it. You save those type of things for when you need them. They need to be rainy day things, and historically that's been the case. You push through tax cuts and stimulus plans and infrastructure packages, all that. When the economy finally turns, when you start to enter a recession or contraction, you need to save those bullets, save those arrows in your quiver until you need them. If you use them right now, this economy it does not need any more juice. You guys know I'm probably the biggest critic of Jay Powell and have been for a long time. I think others are starting to finally see what I've been saying. Look, inflation, this is real. He keeps referring to it as transitory. I would love to sit down and talk to him and say, what makes you think that? And I know what it is. Just because the last 10 years, that's been the case. Commodities were in a bear market. Every time you had a little rally, it proved to be a bear market rally. And like I said, I've been able to make what I believe to be a very strong case that we're in early stage bull market action. By the time he realizes it's not transitory and he starts to tap the brakes, it ain't going to be pretty. Now, the thing is, that can take quite a while. Or maybe it doesn't pan out. We'll see. Either way, this is what's going on. Yet, as we all know, the Biden administration, here it is. Here's the takeaway from last night's joint address to Congress. Stressing the need for massive federal investments in infrastructure. All these social programs to pay for by higher taxes on the wealthy as well as corporations. Okay, that stuff. I don't know how much longer the market's going to. I guess right now it's dismissing that as we'll see. Maybe it doesn't happen. But raising taxes on the wealthy and on corporations is never good for the stock market. Okay, you might have your own views on how to take care of everyone else in the country, and again, keeping politics off the board. I'm just talking facts here. This is what's going on, but also this is what's going to kill and has been killing the dollar. This is why I remain bullish on gold. They're all their spending is not going to be good for the dollar and our government and our economy in the long term, especially at this point in time. Let the rebound from COVID take its course. It's doing fine. So you have the government coming in almost nuclear with their response after the Fed went nuclear back in March of last year. In response, and the Fed, Jay Powell, continues to keep the pedal to the metal. Yet you see, inflation, all commodity prices, housing prices, you name it, everything going up. Those are some ugly cross currents from the market that are sooner or later going to take grip. And again, that's fundamental stuff. So I'm kind of rambling here with this. It is longer term. It affects my longer term outlook of the market. Short term, we'll watch the technical levels. Okay. Other than that. Here's the, and I'm just clicking on headlines as they came in recently. Apple posts record quarter, huge revenue. Look at this, 89.6 billion revenue on surging sales of iPhones, premium iPhones, and pandemic-induced buying. So we all know that. Okay, where's Apple going? Okay, this has been, they knew it was coming. Insiders know, everyone knows that everyone's been buying iPhones and other things like that, and treadmills and things, when the stay-at-home trade. Okay, so here's where I'm going with this, and again, bear with me. Here's Apple. This is what it looks like. You can see my box here. I need to move this box. This is a trading range. This is where Apple's been. That was a record quarter last quarter. This was the one they just reported. Okay, here's what happened. They had a blowout quarter the previous quarter as well. Record earnings, right? And this is just a pattern of Apple. I don't know why. I followed the stock for, well, I mean, maybe it's simple. Buy the rumor, sell the news. Apple fell 19% immediately following that last report. So far today, blowout quarter, bearish engulfing candle. Apple is poised to potentially wipe out weeks of gains right here with this bearish engulfing candle, especially if it builds on it. Now, it may not, but these are things to watch for. And again, why? Why isn't the stock going up? Why is the stock still below all-time highs with such record profits growth? Again, priced in, whatever you want to say, maybe an overbought, overloved, overowned stock. What does that mean? Well, if every bull, not literally, but metaphorically speaking, the majority of bulls have their fill of Apple, certainly the hedge funds and mutual funds, who's left to buy it at that point? And that's often where you see a stock, and Apple has a history of that, topping on very positive fundamental news, but yet the technicals say otherwise. There was a trend line break after that, and we've been correcting, and again moving sideways since. Let's just take about here this trading range we're in. We go back all the way back to about right here. We're trading about where we were back in, this is 8 months ago. So Apple has gone nowhere in 8 months, yet they're continuing to make a lot of money. And again, that's the sign people look for in a market, when the market leaders stop going up. Now, they haven't all stopped going up, so I'm gonna try to do this as well balanced as I can. So if you look at some of the others in the Qs, you have Microsoft. But there it is, Microsoft, another blowout quarter, but again, divergent high. So this is where the technicals are overriding fundamentals, and this is where people relatively new to this just don't get it. How can a stock, how can Microsoft report the blowout quarter they just had, and all it's been doing since is selling off, and pretty impulsively today, down almost another 2%. So that's when all of a sudden, this is a signature of a bull or bear trend. And a bull trend, good news is, of course, good news. And guess what? Bad news is good news, or at least it's dismissed and shrugged off. But when stocks stop going up, when a company stops going up on good news, and all of a sudden good news really isn't good news anymore as far as the stock goes, and then bad news becomes bad news, that's where you trend. Now, it's way, way, way too early to call a trend change. We're only down 2 days off the highs right there, the all-time highs. But again, bearish divergence, things like that. Let's just go back to some of the other recent headlines, then I'll move on. We'll wrap this video up, and I'll cover the trade ideas in another video. So there it is, and that's been the trend here. Okay, and you have Jay Powell. My nickname for him is Sunday Morning. You guys remember the song from Lionel Richie? Actually, it was Commodores, Lionel Richie singing, and that's Jay Powell. He's easy like Sunday morning. I've never seen a Fed chairman, keep the pedal to the metal for so long, in spite of everything that's going on. I just showed you. Starting out here, the economy grew at a 6.4 annualized rate in the first quarter. Stock markets at all-time or just off all-time highs. Housing prices, commodity price, everything running, and yet the Fed still plans to keep bond purchases full throttle and rates down on the floor. Crazy stuff, I'll tell you. And again, bullish fundamentally. So let's talk about it. Yeah, bullish fundamentally, but he's also, the thing is, he said that a long time ago, quite a while. He's been saying he plans to keep rates low for years, so that's not anything new. The only thing that's going to be new anytime soon is when he starts to tap the brakes. I talked about that before. Starts to kind of indicate that they may taper off bond purchases or at some point in the foreseeable future raise rates. So there it is. All right, guys. Again, most of you probably read the headlines, but this is what's going on. Biden proposes a $1.8 trillion plan aimed at families, tax hikes for the wealthiest Americans as well as businesses. Google. This is what's going on. Google smashes sales records. These are the headlines. And again, the big FAANGs. Microsoft shows strong growth in gaming cloud. They've taken the company up to a $2 trillion market valuation. This was after they reported. They've seen massive growth and had just a blowout quarter. And then that's what's going on. They're selling the stock. So maybe, you have to ask yourself how much of this final surge was already priced into this quarter. Obviously, right now it's a buy the rumor, sell the news kind of thing. And then just to look at some of the others, you have Alphabet, you have the two share classes. Alphabet's one of the strongest of the lot so far. Amazon, told you, probably the best looking technical chart that I've seen of the big FAANGs. But we're starting to finally now get some potential divergence here, because that's one thing. It's I believe the only FAANG that I had that I didn't have any divergence on it. It would have much bigger divergence if it puts a marginal new high in soon, an equal or marginal new high, because you'd have divergence back from this point. And when you see divergence that big on the daily chart, what you want to do is flip over to the weekly. That's where it starts to show. And then this is what it looks like on the weekly. Big divergence on all my indicators down here. You can see negative divergence. So any marginal new high now at this point, which we're almost at, equal or marginal new high, is going to give us some big divergence on the weekly. And the bigger the divergence, especially on these long-term time frames, the bigger the drop. Here's one I highlighted back here, and there was our sell signal. So it wasn't, highlighted the divergences, building, and it was in an uptrend, so you don't short or get out of your long until this point. Boom, there was your breakdown of a well-defined uptrend line right there. Well, you can see, I think you can see it on the video. Right here was your uptrend line. There was your breakdown, weekly close below the trend line, and that drop from the divergent high was a 36% drop. Even back here on the first drop, it was about 34%, and I figured more to come. And sure enough, that was just a counter trend rally. Before all said and done, the stock fell 36%. And this divergent high would be every bit as big. The divergence is actually a little bigger in scope than that previous divergence. Where's Amazon going to go? I believe to this, I've been talking about it for a long time, this primary uptrend line here that comes off the lows back in late 2008. Most tech stocks and the NASDAQ 100, they ended their bear market in November of 2008, whereas the rest of the stock market, including the S&P 500 and every other index, it was March of 09. But you have, so on a lot of these big tech stocks, that's where your primary bull market trend line comes off of, is the late 2008 lows. And it's a trend line that hasn't been visited in quite a while. We had it here, a tag. We had a tag here. And that would be the next natural target, especially if and when we break down from this trading range here. So this is another stock, market leading stock. It's not going down, but it sure as heck isn't going up now, all the way back to mid 2020. And so if you get whether you get that marginal new high or not, a break below that trading range would take us down, I believe, to that primary trend line. And if that goes, you can see some potential targets down here. Okay, we're under the 30-minute mark, and again, we're going to keep this one focused on the broad markets. I hit on a few of these FAANGs, but just more so to point out the fact they've really stalled out, these market leaders. And again, that does not mean they cannot power through. Maybe this was just a bull market consolidation we had up here. And if we do, we'll know it soon enough. We'll start to see breakouts above these ranges. And then ultimately, if these divergences get taken out, that's hard to chalk up as anything but bullish. But right now, they're very much intact. History doesn't always repeat, but it often rhymes. So this is what I'm on the lookout for. And it all starts back here on that little 60-minute time frame right there. That's where we get a heads up on entries and exits. You start seeing stocks break down on the shorter term intraday time frames like Amazon. Here's some levels Probably big one. This would be comparable to that level on ES and NQ and QQQ and SPY that I showed you in the beginning of the video. So they all have these levels. That's what you'd want to watch for. And most of these also have divergence on that 60-minute time frame. So that's it. Let's wrap it up here and see how we end the day. And then again, if we get anything big, I'll do another follow-up video on the markets today. Otherwise, we'll wait until tomorrow and then see. Even if we get those bearish engulfings today, I'd like to see how we follow through tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.